Thanks everyone for coming to a relatively hastily organized last minute session, but it's good to see so many people here. Chris and I have exchanged emails about this, and he said he was in KL the last couple of days, and so it made sense to come down to Singapore. So we took the 45-minute flight from KL to here to be with us today. My history with Chris goes way back. We were talking about this earlier today. I met him at my first Cybox, which, if you remember your first Cybox, for those of you who went, is quite intimidating. And that was in Sydney, and I was working for Intel at the time, and we had rented a boat that the good ship Intel, which was parked right next to a huge yacht from Bovante, I believe. And then we did some nighttime tours around Darling Harbour before you couldn't do that anymore at Darling Harbour. And then over the years, I saw Chris, and I think I remember a Hong Kong conference in about 2009 where he was presenting and talking about how someday we're all going to pay on our wrist. And I thought, this guy is nuts. He has no idea what he's talking about. And then 5 years later, I realized that he was kind of the visionary of what's to come in this space. And so I think, really the idea of today was to take advantage of him being in the region and talk a little bit more about intelligent money. And I think having that conversation here in Singapore is probably pretty appropriate as well when you look at everything with the NAS and the innovation that's happening around the region and how that's impacting the future of money in general. And so I think when we look at how all of these things come together, it's really apt to have you here around us. If you know Chris, well, if you don't know Chris, I'm not sure why you're here, because you want to get into this event. But I mean, he's been involved in the industry for literally decades. And we kind of started off at the same time and have followed each other's career paths. But clearly, I mean, in my mind, one of the people who knows kind of actually what they're talking about. And if you've ever seen one of Chris's presentations, it's not fuzzy pictures that are kind of meaningless. It's actual, key information about what's happening in the industry, which is why I always enjoy conversations with you, because it's very applicable actually to what we're doing and what's possible within the industry. So, I mean, maybe to start off with, can you talk a little bit about the background of the Intelligent Money book? I mean, you've written 13 books, right?
Actually, it's 23 children.
23 children's books, which might be relevant to some people in the audience. Tell me, I mean, why Intelligent Money? Why now for this?
Okay, I'll keep you a little bit quiet while you're doing the intros there. Thank you all for coming on a Friday afternoon. Obviously, you think that something interesting is going to be taking place. I hope it is. I also have to apologise that I woke up this morning and felt like a vampire ripped out my throat. So if I cough or get growly, it's basically I've got a problem with my throat today. I didn't yesterday, so that's weird. Anyway, so the thinking behind Intelligent Money, what happens is every 2 years I have been writing books, and it tends to be that what I'm seeing and hearing around the conferences and online influence the themes of the books. So, in 2018, a book all about financial inclusion. In 2020, a book all about ESG, and in 2022, a book all about digital transformation banks. And when I started the new one, which has literally just come out, my original idea is not where I ended up. So my original idea is I've had arguments with the cryptocurrency community for over a decade around decentralized money and libertarianism, and the fact that they believe you can have money without government. And my argument is always you can only have money with government, which annoys them. But the reason it annoys them is they assume I mean a central government, which I don't mean. What I mean is there has to be governance of the monetary system that allows you to trust that it has value. And the governance of the crypto system is a network of the people. And that's where I started, which is one of the implications if central banks and central governments no longer control money, because the internet doesn't recognize countries or borders. It's a global network of the people. And that gets into a very interesting debate. But halfway through, ChatGPT came out and hit the streets. And it's not that AI is a new thing. We've known about AI for 30 years. But in fact, longer if you go back to Turing test. But basically, that was kind of a breakthrough technology that made me then think if you could decentralize money, avoid central banks and governments, using AI intelligence in the network of the system of the people, what's the outcome of it? I guess my conclusion is, for most people, it's not something that's going to be something that they are bothered about. The general person in the high street, I don't think, is heavily engaged in crypto unless they're gender or someone like me. I think for the general public, they believe that you have to have central government to provide trust in fiat currency and exchange. And then the final part that comes into it is, so if the central government moves to digital currencies, why is their currency better than the other ones that are out there? And it's because it's central bank digital currencies. But does that imply 10 years from now we won't actually have cash? We've already moved quite heavily away from cash. And I predicted in 2008 that we would have a cashless, cardless future, going back to paying with your wrist. So, we're pretty much there now.
Is it, just sticking on that cashless element of things, there's been a lot of conversations, and I think China just in the past couple of weeks has actually put out, the PBOC has said, okay, you legally have to accept cash because they don't want to go completely cashless. And I think Sweden is the other country that has pushed back on going completely cashless as to not ostracize that element of society. Do you think it's just a question of time before it is cashless and governments are fine with it, or do you think that we still have a role for cash for the next few decades?
Well, the biggest thing about cash is it's an immediate exchange of value that's trusted and can avoid tax. So it has a very strong reason for being around. And a lot of people prefer to use cash. And that's the challenge again with central bank digital currencies, tracking and tracing people. But you see an awful lot of banks now saying they won't accept cash. They won't do cash over the counter. You see an awful lot of banks around the world that won't deal with checks anymore. Do any of you ever write a check anymore?
Singapore, yeah. You have to, when you read the book.
In the Netherlands, they've actually not only banned domestic checks, but they won't accept international checks in the financial institutions. And this is the whole premise of the digital transformation we're going through, that basically banks were built for the distribution of paper through buildings with humans. That's the business model that they work with. And in the last 25 years, it's been turned on its head, because now they're dealing with the digital distribution of data through software and servers. And money is just data. And the question is, who is the government of that data?
Yeah. In the book, kind of when you lay out this future of money by 2030, I think it's relatively easy to think about the technologies that will get us there. AI, blockchain, this. But what do you think are the key disruptions that will happen within the industry that will get us there? So, banks not accepting cash, or what do you think are the 2 or 3 key things that will get us to this vision that you outlined in the book of 2030?
I'll tell you a very long story short. When Second Life came around, which was a fun alternative universe back in the mid-2000s, I got heavily involved in playing there just to see what would happen. And the major lesson I learned is that when Ginkgo Bank folded, which was one of the main banks in Second Life, it turned out it was being run by a student in Sao Paulo who had bought himself a Ferrari and a condominium and just deleted the bank. And the virtual people in the virtual world demonstrated outside the virtual headquarters of Linden Labs for it was about 90 days, saying, "Give us our money back," and we want banks that can be trusted. And it ended up that Linden Labs, because they didn't know what to do, they said, "We're just a gaming platform." And they ended up with a rule that to be a bank in the virtual world, you've got to be a bank in the real world. And it goes back to trust and structure again. So the reason why I mentioned that is the biggest change that's coming up in the next 5 years for me is the whole metaverse conversation, which has been taking place. Because if you bring together artificial intelligence, the metaverse, decentralized financial systems, and more, then you have a whole new structure of thinking, which a bank, I think, still has a strong role to be a bank in the virtual world. You need to be a bank in the real world. And what is a bank actually doing? And my argument is they should be curating APIs and apps and partners and systems across platforms to give the best customer experience and stop trying to do it themselves.
Please tell me, and this is something that at Money 2020, David Birch, your contemporary, said, is that there's no way that he's going to use more colorful language, but there's no way he's going to queue at a virtual bank for a virtual teller. And that's not the world we're going to, is it?
No, I mean, the whole point of intelligent money is when money thinks for you. So you don't have to think about your money, except when you need to. And your delegated authority to the network will tell you when you have something you need to look at. And otherwise, you can just walk around and things will be paid for with the blink of an eye. So I always remember in Minority Report, the Tom Cruise film, where he's walking around the mall and his eye is being recognized by all the advertisements, but that would be the same with payments.
Yeah, that automation. I mean, in that world that we're looking at, how can banks then balance the kind of more personalized, automatic digital money experience while maintaining the appropriate consumer protections? And that's a big concern here with ensuring that the consumer at the end of the day is protected against potential issues with that. How can we find that balance?
Yeah, I mean, that comes back to the point I'm making around trust. One of the big themes that I'm working on right now is trust network systems. And we've seen so many failures in the crypto world, like FTX and Binance and many more, actually. Mt. Gox going back 10 years ago. But that doesn't mean crypto is broken. That just means the trading firms in cryptocurrencies were broken. The actual structures are still safe, if you believe in those structures. And that's to get down to all of our individual views of the world. Some people would say, I would much rather have a bank with a license, and I trust them. And the only problem with the bank with a license who you might trust is that, in fact, you were showing the trust on your phone, which is one financial operator here. But who can you trust most? Would you trust Facebook with your money? Would you trust Amazon to run a wallet for you? It's all about the trust network system and the governance of that system, which doesn't mean central banks necessarily, as I keep coming back to that point, but for the majority of people, I think a central bank-backed license is the way in which they trust financial institutions.
So is our central bank digital currencies or central bank stable coins, is that the way that the regulators are going to create the governance structure around intelligent money? Or because obviously there's trust in the entity that's created it, but a lot of the argument in crypto is decentralization around that. And so then you're trusting the math, rather than the people behind it. I mean, how do you see that evolving? And that balance between what regulators are comfortable with, both in their own digital currencies and then what they have in the market.
I mean, one of the things that's quite clear is that over time, what was quite clear in my head, CBDC currencies will start to become baskets of currencies that are global. So you could take a digital yuan, a digital dollar, and a digital euro, put them all together, and you've got pretty much a northern hemisphere coin that could be traded all the time, every day, in real time with intelligence through the network. And the only part where governments have any control is cash in and cash out. To say that we won't need cash, but when people put money into a account, then questions can be raised again. We're talking about this, which is that my bank recently interrogated me regularly because I've been taking money out of Coinbase on quite on a regular occasion. And they said, where's this money coming from? How did you source the funds? And this is because the UK Financial Conduct Authority has brought in a rule that says that banks, if there's large movements that relate to cryptocurrencies, have to drill customers on their activities. You certainly have a similar thing here when you're removing some large funds.
Yeah, inappropriate oversight of money movement or not. But in my personal experience, we had some, my bank, I won't mention the name of the bank here in Singapore, reached out and said, we believe you're using your personal bank account as a business bank account. I said, okay, well, why do you believe that? And they said, well, you keep on having all these transactions with Wise and Revolut. And I wrote back and said, well, I'm having transactions with them because your FX rates are shitty for overseas transactions. And even the compliance department had no idea what these businesses were doing. So it was quite. Sticking with the regulators for a minute. I remember at Sibos, I guess a year and a half ago, when we had the CBDC panel, and we were talking about, we had somebody on from the Bank of England there talking about the way that they're going forward on things and the digital euro and everything that's happening there. And what kind of excites you around particular governments? Are there any governments or government activities that excite you kind of moving in the direction of intelligent money? Who do you think has it right?
Well, most governments and regulators are sitting in sort of the lights of technology that's about to smash them in the face because they haven't regulated artificial intelligence. They're looking at it very carefully. And the reason why it's important is the biggest growth over the next few years will be in cybercrime using deepfake. And there's no way you can tell the difference between Chris Skinner in this room. I said that I'm physically here, but a virtual Chris Skinner could be looking exactly like me, and it's not me at all. And you're seeing this growing quite quickly. And I think the regulators have a huge challenge because one of the things that I pointed out is for a bank and the regulator, they have this great ability using the network and the digitalization of money to know who you are, what you're doing, what you're spending, and how you're spending. And that can be a good thing for a customer. We started with PFM 8 years ago or thereabouts. This is PFM on steroids. You can really start to provide really good intelligence around customer accounts and what they're doing. But that needs to be regulated because you can abuse that authority and that analysis. So I think there's a whole range of things that around, particularly deep fake artificial intelligence, will have the regulators start to wonder how they can deal with it because they're primarily got a clue.
So are any regulators around that moving in the right direction in your opinion?
Not as far as I can see. I mean, obviously there are different countries that believe they're on the leading edge of these things, Singapore being one, and UK being another. I don't know here what the Singapore Monetary Authority is doing about AI, but the UK regulators are not even talking about it right now.
Is it, just sticking on that point for a second around regulation of AI, the thing that strikes me is that it is a global arms race, and there's no way that we're going to get all of the actors to commit to a set of rules around that, right? There's just the elephant in the room is China, right? Getting China to agree with the US around a set of appropriate use of AI. I think just outside of the financial industry as well, it's very unrealistic that we'll ever get to that point. So is it just going to be for each country to look at what's right for them? How are we going to deal with that kind of the global threat of AI around some of these deepfakes and everything else?
Well, it comes back always to we let technology out of the box, and now we have a network of the people that can do whatever they want without any government interference or control unless they cash out, so it can be tracked and traced through Wise and Revolut or whatever you use. So I actually think, and I said this a long time ago, that the G20 should come together and work on a global coin that's endorsed by the leading economies and countries of the world. They probably ain't going to happen, but never say never.
And the natural outcome of these changes that we've been talking about is the competitive dynamics will change. In the audience today, we have fintechs, technology providers, banks. And how do you see that changing the competitive dynamics in the industry? I mean, maybe talk specifically about retail banking and consumers.
Yeah, I mean, there's kind of layers here because most fintechs, I think, focus on doing something really specific and then put down onto the ecosystem as an API or plug and play software. So they're not trying to boil the ocean, they're just trying to do a very specific thing, which is how Stripe started, which is now the poster child of fintech. Because they did one thing brilliantly well, and they've expanded gradually into doing more things and creating a global network. So on a fintech, I think it starts with something clearly that no one else is doing well, or copy something that someone's doing well somewhere else and bring it into your country, which is what some do. Then you get the challenger banks, which have always been viewed as they're not going to challenge anything, because you don't replace big banks. I don't think anyone has. Having said that, the challenger banks are doing pretty well. Monzo is now at 9 million customers. Revolut's 40 million, although they don't have a bank license in the UK for various reasons. But they just expanded in South America. Nubank's just broken 100 million customers in South America. And Nubank is probably the most interesting case study because when they started, they didn't say they were going to be a challenger bank. They said we're going to attack credit card fees because they're far too high. And before they knew it, they were doing really well. And then the regulators said, you're doing so well, would you like a banking license? And that's how they expanded into full service banking. And they are kind of a threat to all banks. And so what I say to the all banks, going back to what I was saying before, you need to partner with the fintechs that are doing something really well. Stop trying to build everything yourselves and take the challenge seriously, because what they are offering is specifically designed from the ground up for the distribution of data through software and servers, unlike the banks who still have a model for planted in buildings with humans.
You do have some examples. I mean, DBS here locally is a great example of, we were talking about DBS remit over lunch today, and could be argued that was in response to Wise and some of these other Instagram and some of the other cross-border remittance platforms. I mean, you do have the examples of traditional banks that are able to, whether you call that innovation, I mean, it's business model innovation, certainly. You still have banks that are able to do that. I mean, is it still the case with technology that's relatively commoditized that they aren't able to do this? I guess it's a mindset thing that they're still not able to kind of innovate that quickly.
Yeah, I know GPS best here because they joined me in doing digital transformation book and shared their journey. And I think it's interesting because a lot of people are skeptical about any bank that says we're 27,000 fintech startup, 27,000 people fintech startup. We're going to deliver joyful banking because it's kind of a lot of people look at that and just go, I can't see that happening. But DBS have delivered on some of those promises, but I know they had an outage the other day, so they haven't delivered yet a fully robust digital structure. It's getting there, and equally, they still have quite a lot of distribution through buildings with humans. And I'm not saying that you will end up with banks with no branches, but the business model has to start with the foundation of the network and the data, and then say at the end, what do we add to this for improving customer experience, which could be a branch. Unfortunately, even DBS hasn't quite got that.
Coming back to the concept of intelligent money, when we look at traditional banks versus challenger banks, I mean, I guess maybe the obvious answer is challenger banks, but which are better equipped and which do you think are going to get further along with intelligent money faster? Because the argument, I guess, for the traditional banks is trust, data, experience, whereas the challenger banks have, agile technology, agile organization. I mean, how do you see, as we come to this vision of intelligent money, how do you see those players playing a role or not if it's going to be decentralized?
Well, the monetary authority has issued licenses to quite a number of banks here, to be digital banks, and as soon as you have that license, then you're as good as a traditional bank, and probably better because you're far better equipped to build a business model based on artificial intelligence and all the things we're discussing, from the basics, from the clean sheet of paper at the start. You don't have any heritage to deal with. But it's quite clear that if you've got billions of capital, millions of customers, centuries of history, then you have a great advantage over someone who's got no customers and no capital and no history. So there's a balance. And when I look at Monzo, for example, what they've done very well is building the idea that a bank brand can be cool. And that was the coral card that they started with, which you remember those. And that to me has been interesting. Again, with Wise and Revolut, it's to do with FX for me. So there's a clear advantage there, which is why they gained a great space, and they're gradually adding on more and more services.
Yeah. When we think about intelligent money and how banks are going to provide this, I mean, I think back to the iPhone, and nobody knew that they needed an iPhone until Steve Jobs gave us an iPhone, and then all of a sudden everybody needed it. Is intelligent money going to follow the same path insofar that, I'm 90% happy with my banking experience, but is intelligent money just going to completely change? So I'll never look back at the old world where I was using, just what I have today.
There's no going back to, you've been assimilated. In fact, it's funny because I remember one of my worst presentations I ever gave was here in Singapore in 2009. It still hurts. It was at Euromoney Treasury Conference, and that morning on the headline of the paper was that the trade minister in Singapore had said that iPads are for dummies because he couldn't see the point of it. The iPad had just come out, and I said, unlike your minister, within a few years, all treasury operations will run on apps, on iPads. So your employees can do everything really simply, from netting, pooling, FX, etc. And everyone laughed at me and marked me 1 out of 10. Well, there you go. I was right. But therefore, where are we going with artificial intelligence? We already see a lot of it being used mainly in financial services for fraud management and tracking risk. The main areas. My favourite quote was from 2017, where JP Morgan just used AI to automate his commercial contracts and saved 360,000 hours of legal time in 1 second by doing it that way. And it's now 7 years ago. And Click and Fire says 1,500 lawyers. So obviously that's a good thing. Where we are now is far in advance of that. So and the most interesting thing I think about ChatGPT is if you look at the background, Sam Altman and obviously Satya Nadella, now that Microsoft has bought the company. But when they started, the main backers of ChatGPT were Reid Hoffman, Peter Thiel, and Elon Musk, the PayPal mafia. So they obviously see the opportunity. I don't want to go on wild forecasting. I'm not a huge fan of Elon Musk or X and what he's done to it. But X is definitely going to start trading money and payments.
Yeah. When you look at intelligent money, in your own personal life, what excites you? What are the 3 use cases that 5 years will be indispensable for you in your mind?
Well, there's obviously one thing for all of us, which is eventually we don't have a job. Maybe we retire or get unemployment, hopefully not. But if those things happen, an immediate advisor to tell me how to pool my money and spread my money and cover my future outgoings whilst I'm either trying to find another job or for my pension. I think the thing for me that would be most interesting is when right now most of my banks, my old banks, when I go online and look at a statement, they show me transactions. They don't show me information. And that's because the old mainframe systems that they're still using today. Nothing wrong with the mainframe, by the way, but 43% of banks run on COBOL. Doesn't seem quite the leading edge you would expect by now. The transactions don't even provide complete information. Quite often it's being shortened just so it can fit the 20-character field length of the old system. There's a huge opportunity to make that better.
If this was a sponsored event, we'd have a couple of companies sitting here in the audience that would be happy to talk about ISO 20022 to how that's going to solve some of the issues around this. I mean, how far, when you talk about some of these use cases, how far off are they? I mean, is this, because the thing that strikes me about, I mean, the idea of having an AI that could better tell me how to invest my money, I mean, we've had robo-advisors for a decade now, and they've, despite AI being there, they've kind of failed to live up to that promise. I mean, there's still portfolio managers sitting in the background, adjusting things, setting them on a portfolio, and then you're just a number that adjusts the allocation on that. I mean, what has been missing from that? Is it really just what we've seen in these large language models over the past couple of years, or is it the business model? And how will that affect, maybe specifically around robo-advisors, how will that affect that industry?
Most of that's related to customer inertia. Customers don't want to move their money around that easily or quickly, even now they can. Most customers don't. Having said that, I have to qualify that. When I look at the Gen Z attitude towards money, it's very different to the millennial and the boomer, mainly because they're very open to new ideas about money and investing. And I can't remember the accurate number, but something like 25% of Gen Z got crypto. So if that's the case, then there's obviously a trick being missed by traditional firms and an opportunity for new firms. That's why Revolut just launched a crypto platform, because they recognise all the space models is the same. Most of the digital challenger fintechs are saying we need to include all these things because our customers want them.
Yeah. We'll open it up to the audience for questions in just a second, so please think through your questions, and maybe if we can get a microphone to pass around. I mean, with that, Chris, you're a bit of an exception because you're a boomer. I hate these generation problems, so if I'm insulting you,
I'm actually a bummer.
A bummer. Okay. A bummer, a Gen Z inside a bummer, insofar that you're using some of these tools because you're nerd out on these things. One of the challenges in Asia is obviously the aging demographics. China, Japan, well, China's population is entirely shrinking, and it's getting older. Japan, kind of the same thing. How do you see this impacting? Because I think the Gen Zs, the younger generation, the millennials, is a little bit easier to see what the implications are. But what do you see the implications of intelligent money for the older generation?
As I say, for financial planning based on their income, pension, and outgoings, allowing them to see in visualized far more information about how they're living their life and what they need to be thinking about for the next year or so, because they need to forward plan. I think the problem for an awful lot of older customers is that they still want the human contact in the branch. They still want to use cash and checks in some countries. They do use mobile apps, so you can't just say they're not going to go digital. They have gone digital, but I certainly know from dealing with quite a few older people in my family that they don't trust the tools. They would rather feel that they can knock on the door and see someone.
Flipping to the other side, my last question for the millennials and the Gen Zs who are embedded in TikTok, is that going to be the new platform? Are these apps going to be the new financial platform, or will we still have a trust bank on one side, and then you still go there for all your financial services, but you're using TikTok for entertainment? Or do you see this? Because that's always the discussion, is that ByteDance eventually will incorporate more payments and finance into TikTok, and arguably with that algorithm, it would be pretty damn good at kind of mapping out financial strategies. Do you see this narrative of these things coming together where finance is in these apps and these become kind of the new super apps, so to speak?
Yeah, absolutely. I mean, one of the other lines I was using in the book is that money's becoming intelligent, invisible, everywhere, and embedded. So if that's the case, then that's why money thinks for you, because we're not thinking about money anymore. We're just thinking about living our lives digitally and physically, and having the system look after us. So, again, it's not just demographics, but it won't suit everybody. But if you think intelligent money everywhere, embedded in everything, and you can just get things. I mean, I've been in the Amazon store. I don't know if you've been in the Amazon store, the Amazon grocery store. You just walk in, fill in a basket, and walk out. And it feels weird, but that's exactly where we are today.
They're also closing those in the US because they're paying too much leakage. But questions from the audience?
There's already some tools that can do that. Although I did get one that came through the other day, and I realised halfway through going through their menu that it was a complete scam. So be careful. But certainly using AI to look at the highest yields. I mean, we were doing this 25 years ago, doing paired trading, which is basically using neural networks to look at one stock's rising and another stock's going down, then offset investments and change investment strategy. Then that became algorithmic trading, and that became program trading, flash trading. So if the investment banking market can do sort of intelligent trading, then obviously there's an opportunity to do that for the retail markets. And to your point around robo prices, that's what they were meant to be doing. But I don't think that they got there, because do any of you use a robo advisor? Yeah. What do you think of it?
So it's what Zenon mentioned, right? It is a bunch of if then else decision trees right now, then through AI. And part of it is capability on that side, part of it is acceptance, adoption, that ability to be okay with 10 days a day, which makes a mind.
Yeah, I mean, what's interesting is 10 years ago in fintech, the big buzz around Cyber, and every exhibition in Money 2020 is suddenly going through the roof with popularity. The whole conversation with robo-advisors and PFM or such things. I don't see a buzz right now of one theme, apart from the AI integration and maybe quantum computing, the metaverse. I mean, again, many years ago we talked about intermediaries and replacing intermediaries, and an intermediary would be an intelligent agent that works on your behalf. So I guess I'm saying it's going far beyond just investing or savings or the areas that typically portfolio managers deal with, level of risk appetite, etc. It's every aspect of your financial life will be embedded and intelligent everywhere. So even if you're going through the store, you grab some things from the store, you don't have to think about paying for those. You don't have to think about your balance unless you programmed it to be that way. So it's much more in the hands of the user and the customer experience. And that's where I think it's driving towards, particularly if you look at Apple Vision Pro, which I haven't tried, but some of my friends have, the visualization tools. So as you walk around the store, you can see all the prices, you can see your balance if that's what you asked the system to be set up like. And you can just take the things as you see them. Standards are very important. And it comes back to things like bank licenses and regulations. The banks haven't asked for these hundreds of thousands of regulations. They're there for a reason. And again, I think quite a few technologists were a little bit naive about how banking works, because behind in the back office there are reasons why banks work the way they do. Doesn't mean it has to be that way. It can change. But it can't change if there's no governance. And so that's what I always come back to. And the struggle, and I haven't got a conclusion on this yet, but the struggle I have is what's the right governance of decentralized finance? And I said it's the network of the people. From my side, I find I'm using Coinbase, mainly because they are a regulated platform. There's lots of layers to that question. Because the concern for commercial banks was basically that central banks would distribute direct and bypass them. And in most countries that isn't the case. That's not what's being established. The second part of it is that if a central bank is using distributed ledger technology and blockchain to manage the currency, what's the difference between that and a crypto company using distributed ledger technology and blockchain to manage value? So you start to question what's the game that you end with, and it always comes back to what I keep saying. It's around who you believe in. It doesn't mean that you have to accept a digital currency from the Singapore Monetary Authority. You might say, I'm just as happy to trade in Bitcoin or Ethereum. That's your choice. But I mean, the biggest issue is the old comment from Willie Sutton when he was asked why you rob banks, and he said, because that's where the money is. So you're always going to have people who are trying to rip up the system. And it used to be that the head of fraud at one of the big global banks I was dealing with would say there's an acceptable level of risk. So as long as we keep fraud and hacks to a certain level, typically under 2.5%, then we're okay. I think that's getting very difficult. Yeah. Although it's quite interesting because Alipay have about 0.9% fraud. And the reason why Alipay is so efficient is every 3 or 4 years they reinvent their architecture and platform. Yeah. I mean, they rebooted, so I was there in 2017, and they just launched their 4th generation systems architecture, which is all about using visualization tools and artificial intelligence to track and trace likely fraudulent transactions. And they had a screen the size of this room showing all transactions taking place in real time. It's quite incredible. They started working on the next generation architecture, and that was to support 2 billion users doing over 1 million transactions a second. Stunning company. Thank you. It's quite interesting because banks are instruments of government and vice versa. They go hand in hand. If you have a healthy financial system, you have a healthy economy. And it was, I live in Poland, and when markets opened in 1990, the first thing they did is invested very heavily in building a strong capital market and a strong retail banking marketplace, which has now led them to be the 4th largest economy in Europe when they were 27th in 1990. So that relationship is symbiotic between the banks and the government. And the government's issue is often they don't trust the banks to report properly. So Austrians, and this is about 10 years ago now, started building a regulatory data system that could access the bank systems on a real-time basis, 24/7. It didn't take off because I don't think the banks liked it very much. But I still have this idea, this vision that one day all governments as regulators will say, to have a bank license, you have to allow us access to your systems on this structure and on a basis that we can do that whenever we want. Engaged.
So you see regulation catching on with some of these ones?
Yeah, I mean, regulators are always behind the 8 ball because they can only regulate what they see. And that's the reason why they haven't done the AI regulations yet, because they're not sure what it means. And it's not just AI for intelligent finance, but for copyright. I actually got GPT to write one of my blogs the other day because I was being lazy. So just write a blog in the style of Chris Skinner about the future of banking.
So who's Chris Skinner?
Then he actually said that are you the one allowing it? I said, well, no, there's quite a lot of risk into that. But the regulators are going to regulate what they see, so it will catch up. But that's the reason why I quite like the sandbox testing ideas, because at least as a regulator, when it goes mainstream, you'll need to regulate it, but before it goes mainstream, you can test it. That would be the idea. Yeah, I mean, what we're really getting into is digital identity, which is Mr. Virgin's space. And right now, I think we're going to have to get much smarter on digital identity, because then you could recognize a deep fake scam because they wouldn't have the right ID. Equally, you could have your money decentralized through the network in your own persona, and then release some of your identity on an as-needed basis, rather than having a government or a bank issue you your identity. The idea of chip inside, yes, I was talking about it a long time ago. Sweden actually did it. So if you go on the Swedish public transport system, you can pay with an embedded chip in your hand. But you've only got about 3,000 subscribers, because nobody liked the idea. And more than that, they thought that it would be used by government to track and trace their movements, even though it was a passive chip, it wasn't an interactive chip. And that's where there's a whole barrel of things still to be done. We talked about digital identity and identity management and cyber store. Since it started, it still hasn't solved.
Yeah, I mean, you mentioned Alipay. I remember using one of the Alipay facial scans at a Kentucky Fried Chicken, which is not scale Kentucky Fried Chicken for whatever reason in Hangzhou, and facial payments never took off. But we're finally using the thumb, but there's some human condition that doesn't allow us to use our face in some of these transactions.
And if you haven't seen it, you can go on YouTube afterwards, because at One Money 2020 they had a little video advertising pay by arms. Yes. Thank you. I mean, one of the things we have to clarify up front is we can't just talk about banks, because there's commercial banks, retail banks, investment banks, private banks, and most of the challenges have only targeted the retail space. So I think there's quite a long way to go in that dialogue around if they could upscale into other parts of the financial markets, and what would they offer that would be better or different than traditional commercial banks or investment banks. And it could be that AI integrated yield search, for example, which for some people would be a huge bonus. I tend to find, though, that corporate customers are not interested in massive innovations in their financial accounts. They, as a treasury, would want better support from the bank, maybe better information from the bank, but they don't change their banks that often. So corporate commercial banking maybe isn't something that a charity would get into. There's another part to that, though, which is for most of the traditional banks, and you can tell me, I mean, do you think they're actually getting there with digital transformation and competing with the other challenges?
It's a better question for the audience. I mean, what we see here in Asia is you see the traditional banks trying to innovate just within their traditional stack, and then the argument, at least for Mox Bank in Hong Kong, was we're going to build, Standard Chartered is going to build this second infrastructure and gradually move things over to that. So you have kind of the simultaneous parallel. My analysts could talk about this better than I could. These parallel builds to do it, but we haven't seen those be successful yet. I mean, I guess the most successful model is ground up greenfield digital bank, like Trusteds, I guess. I'd be curious for thoughts from the audience. Anyone? Here.
That's the last time I'm coming. I think the comment I would have is perspective. Right? So for banks, I'm not sure that, and I apologize to the banks in the room, I'm not sure that banks typically look at digital transformation as transformative. I think they still look at it as a channel strategy. And I think that's the big challenge. when they can actually start thinking about what it means to be transformative, then it's a game changer for them. Whereas challenge banks, neobanks, they start with that in mind. So Trust Bank is a great example. I believe 2020, I had sat with Trust Bank, and lovingly I said, we're 95% or more banked in Singapore. What do we need digital banks in Singapore for? And the response was, we are very focused on the experience. Now that's quintessential to digital transformation. If you start with that as a premise versus a channel or technology strategy, well, you're changing the game. So I think that's the big difference.
Yeah, I mean, it's interesting when I was talking with one of the big European banks, and they introduced me to their chief data officer, and I was like, and then I realised they had 7 of them, one in each line of business, and no harm in your integration between any of the operations. And I said to them, you can't treat digital transformation as a project with a budget run by a chief officer. It's the whole organisation, everything. It's all or nothing. And I still feel that a lot of the big banks haven't quite got that. I feel that some are getting that, but it's probably about 1 in 10, maybe 1 in 100. I actually hate the use of the term channel. Multi-channel, omni-channel, because it's a last century word. We don't have channels. We have platforms. So, also what you were describing, Corey, is the iterative process. So, ING Direct and First Direct in the UK were based on telephone banking, and then came online banking. And I was writing about it just yesterday, I think, which is I joined the David Bowie back in the late 1990s because I'm a fan of David Bowie, but it never really went anywhere. And the reason being is that an awful lot of online banking was too far ahead of its time, and people weren't ready for something that wasn't going to be that useful in their day-to-day life. They had to go to a screen to get access to their banking. And that's why, on this iterative scale, when cloud computing, the smartphone came out, which was 2007, 2008, as it started to mature, that was the game changer, which meant that the challenger banks could come into the market, exploit those technologies, build a customer experience from the ground up, and focus on that as their passion. And that's what the big banks have struggled with, but they are getting there. And by way of example, my business bank thinks that I'm one of their biggest digital customers because I used to go into the app 2 or 3 times a day. But why was I going into the app? I was checking to see what the balance and payments were that day. Now they copied Monzo and they give me push notifications, so I don't need to go to the app at all because I know what's going on. But it took them like 5 years to copy that from Monzo.
It's impossible to do with some banks here in Singapore. I still get paper statements for, the way to turn it off. Maybe one last question from me selfishly is, with all these things, some of the scenarios are potentially scary, right? Where we're moving into this new digital world where money's thinking for you. What have you done personally, or what do you plan on doing personally around your own finances to, for lack of a better way of saying it, protect yourself? Or what are you worried about with what's coming, and what have you done in your own personal life to kind of control for that?
Well, on the second part of the question, I buy Marvel comics and children's first edition books. So that's one of my passions because I'm just a kid at heart. But it's diversifying your investments. So I've got quite a lot of digital assets, I've got quite a lot of physical assets, and it's just making sure you don't bet the farm on one thing. You need to make sure around that. To your point around some of the stuff can seem scary. I'm a big fan of movies and stuff. So if you remember the film Her with Joaquin Phoenix, who fell in love with the operating system, That's a huge benefit, maybe. Or it's terminator, or it's something in between. And I always think that the more we get progress, the more we work out, or we try to work out how to manage it.
Thank you, Chris, so much for being here.